There we go. We use Finlogix tool to use the market sentiment and to be able to trade against the majority. Okay, that's pretty much what we do. Cool. So from that, let me just go quickly over what we're going to be looking. For those who are new here, welcome again. It's really cool to see that you guys, some of you guys that were here yesterday came in today as well. Today is not the, that macro sort of talk that we had yesterday. It's more like an easy going strategy that everyone can use it. So if you are a little bit more advanced on trading, if you understand a little bit more, in terms of risk management, entry points, etc., then maybe you will be feeling a little bit boring, but come along, let's have fun, because in the end of the day, that's what it matters. Have fun on life. Life is too quick, it's too short. So, and learn something from me, from the others, as everyone here has a different perspective of the market. But usually we use Finlogix Sentiment Tool, and we're going to be looking today specifically on Euro Aussie, Euro Dollar, as well as Aussie CAD. And from that, we're going to be taking some trades if there is any to be taken, or otherwise we just have a chat about the opportunities on the market so far. Okay, but as usual, before we go any further, I need to put the risk disclaimer up. So I will bring the risk disclaimer, you guys have a look at it, and then we should be ready to start. We're back in a second. All right, I think we're good to go. Let me just take this off and come to here. So for you that is first time here, how can I get access to it? Yes, that's a really, really good question. All right. Well, it's really easy. It's free. Okay. You don't need to pay anything. You don't need to put credit card or email or anything like that. You just come to finlogix.com. So finlogix.com, enter, and then come into tools. And then you're going to have like a bunch of tools: economic calendar, earnings calendar. If you trade stocks, I'm not a big stock fan, but if you are, there you go. Market sentiment and financial widgets. Come to market sentiment, and that's exactly wait a minute. There you go. And that's exactly what you're going to be able to have a look. All right. And then we can go together. Wait a minute. Someone is trying to join us. Okay, cool. All right. So basically what we try to do here is we try to trade the minority. Okay. But there's a few things here. So in this case, we have 99% shorting and only 1% long. So we would go long New Zealand dollar, Japanese yen. A few considerations that have changed on this strategy. First thing, we're not trading Japanese yen pairs. Okay. The reason is too volatile, unpredictable, too much forward guidance. We're not looking to touch at the moment. Okay. Second, if the position is less than 10%, then we're looking to take the opposite. Okay. In what sense? Well, in this case, we would looking, of course, we're not trading Japanese yen, but in this case, we would be looking to short. In this case, we would be looking to short as well. This one, we would be looking to short as well. And then this one, we would be looking to long, because it's more than 10%, less than 10%, less than 10%, less than 10%. Okay. So hopefully you guys understood. For those who are first time here, if you have any questions, again, you can just raise your hands. You can just send me over on the chat, and I'll make some time to read that. As I say, it's not like a very fundamental sort of aspect, because we have to we have to have content for every public. So let's get started. So first one, NZD-JPY. So as I say, we're not trading Japanese yen pairs, so we're not going to be trading NZD-JPY, EURJPY, Pound JPY, US dollar JPY, and any other that has maybe pop up. These tool refreshes every 15 minutes. So in next maybe 30 seconds, it will refresh, and then the numbers will change, or maybe another pair will come in, or something different will appear. So it's always really, really good when you get a trade. You should be looking to have a look every day at least to see if something has changed. Okay, so we can see the history of the market sentiment. That's really good, Sheriff. That's an awesome question. There we go. Updating, and see, nothing changed, but that's exactly what I've mentioned. No, unfortunately, if you click on the pair, you're going to be redirected to the to basically like this part where you can see a little bit about the pair, but nothing that you can use, that data. We don't offer that sort of indicator. I know things such as like Prime Market Terminal, for instance, a little bit more professional, I would say. They do have the index as well, and they do offer that type of how to say, that type of indicator, right? A little bit different. So let's say, for instance, EURUSD here, we can open on the positioning, and then it's a little bit more in depth. On this case, we can see the history. Okay, that's a daily line, but I can change here for, let's say, every hour. I don't recommend every hour, but anyways, or monthly, and I can see the sort of changes. So at the moment, the market is much more short. Yeah, so you can base on the flip. Yeah, I know Finlogix don't have that, unfortunately. But as I say, if you are a little bit more advanced on trading, maybe you will be like, oh, come on, man. Yesterday we were much more advanced, and then today you dumb it out. Yes. Wait a minute. So like that, you can see the evolution. I know what you mean, Sheriff, but that's a really good feedback that I can give for the developers, because that's a sister company from ACY, as you can see, by ACY Securities. And we have, direct contact with them. So we can sort of ask for them to create that indicator. And it's really good, because I've built once a strategy that I was only trading the flip from the book. So whatever was happening, flip to less people buying, I was going to sell it, and it was always happening. So that was very interesting. Okay, cool. So let's have a look now on what we got here. Not trading. EURUSD. EURUSD is recommending as a strong buy, but as it's a very low percentage, below 10%, I would be looking to short. Let me just open a chart here. And EURUSD, right? EURUSD, yeah. So EURUSD. So if we look, that's a 4-hour chart. That looks really, really great to go short, actually. I wouldn't be looking to go long, just because the long move, I think, already happened. This whole up move here. This whole up move here already happened, and it counted as a long already for myself. So what I'm looking to do now is, I'm thinking that those people stuck on these longs, on these shorts, what they will try to do, they will try to start longing, because it's a pullback, so market will retrace and go up. I think it differently. I think the market can pull back down to this area, and then from there we can see what we do. Okay. So my opinion here is basically I'm looking to short it, Euro Aussie, because it's below 10%. Okay. So we'll keep it. Oh, I had it one here. I will keep it as it is at the moment on the watch list, and then later we can come back and decide what we're actually going to be trading. Okay. Next, euro dollar, strong buy. Well, if we're selling euro here and buying Australian dollars here, and we're buying euro here and selling US dollars here, basically we have the opposite position, but just with the quote different. Okay. When we look to the DXY, for instance, we know that it's below 100,000 at the moment. Okay, that's a 15-minute chart. It's below 100,000, and let me just do something here. That was pretty cool. That was really cool. Yeah, first target hit, second target. So interesting things may be happening very soon here on the US dollar index. So in this sense, we basically trading like euro. We have one, so we short in here and we long in here, so the exposure is pretty much 0. Australian dollar, we have a 1 exposure, and then the dollar we have a -1 exposure, because so basically the portfolio is pretty much long Aussie dollar. Okay, so maybe you'll be thinking like, oh, what's that? Well, we have 2 pairs, right? We have 2 pairs and we have 3 currencies: Australian dollar, euro dollar, and US dollar. So basically we have a arbitrage. So we have euro on the top, euro on the base, dollar on the top, and Aussie on the middle, let's say. Okay, so we have these 3 currencies trading, and we're trying to take advantage from Aussie dollar bullish move and US dollar bearish move. So in a sense, it would be much smarter to us to pretty much long Aussie against the US dollar. Okay, so at the moment we have a neutral situation, but it's only 41% of the market looking to long. So we can actually do that if we come to Aussie dollar. Zoom out. I think we just missed a boat. Because yeah, if we had it something around here, we could do that, but I think we just missed the boat. But hopefully you guys could understand the sort of, you know, when you allocate it in one currency, you actually buying or selling the base or the quote. If you think that euro dollar will go up, you're buying euro and selling US dollars. If you think that euro dollar will go down, you're buying US dollars and selling euros. Okay, because whatever happens for the market to go up, the base, so the first currency, has to be strong, and whatever happens to the market to go down, the quote, that is the second currency, has to be strong. All right, now let's go. Euro Aussie, we already know. Euro dollar long, so let's go euro dollar. Yeah, euro dollar has been a, I've mentioned it, you know, I've mentioned about 111, I've mentioned about 112, and we're very soon reaching 1.14. Okay, we actually hit it already, sorry, 115. We're very close to the 115 target. I guess we may have a bit more to go. Okay, I think the US dollar will continue to fall, and basically US dollar index is the opposite of euro dollar. If we have an invert scale, so if I add euro dollar here, right, like that, we can see that it's exactly the same but opposite. But if I invert this scale, it's exactly the same. It's literally the same. Okay, so in candlesticks we can see the DXY, and on pink line we can see euro dollar, and you can see it's exactly the same. Okay, because the basket that that has the index, the DXY index, is mainly composed by euro. Okay, so you can see right here, oops, sorry. You can see it right here that most of the basket is about euros. So 57.60% is with euro. And then a small other portion like Japanese yen, pound, Canadian dollar, Swedish krona, and Swedish krona, Swedish francs, sorry, and then SEK as well. So that is pretty much it. Okay, so my opinion is if I think that the US dollar index can possibly come back down to, let's say, revisit these lows right here at 95, I'm believing that euro dollar can possibly go up to 1.17. Okay, so yes, I agree on this long position. I think we're just not well placed at the price at the moment. I would like to pay a little bit cheaper for euros. I think it's too expensive to long on this high. So let's leave it aside and see what else the market has to offer us. Here's a pound Aussie. Again, remembering that we are long on Australian dollar right here, and short on euros. Here we should be long in euros, short US dollars. Right here we would be looking to long pounds and short Australian dollars. So let's have a look at GBPAUD. Oh, wait a minute. Yeah, that's the trade we had last week. We caught this trade last week, this smaller trade here. The biggest one has been running since the first week of this month. But yeah, let's have a look if we can have a break below that area there. It's a good trade. It's a really good trade. GBPAUD. Oh, yeah. GBPAUD looking too long, only 22% of the market. Yeah, that looks good. That looks good. Pull back there. I think it would be good to have some neutral on the portfolio basket. Japanese yen, pound dollar looking too long as well. Again, we're looking to heavily short US dollar in this case. Let me put it on the daily. Yeah, I think 95, somewhere around 95 would be the next target for the US dollar index. Not too sure when, but I think that possibly can happen. So on the pound Aussie, sorry, on the pound dollar, would be, smart to long pound dollar as well. So let's have a look at pound dollar. Don't forget that tomorrow we have the ECB, and I've mentioned it on the Telegram. I was doing some analysis today. I was like, there's no sense for ECB to pause, okay? Because if we think such that the economy has been doing not that good, but the whole thing is about what's going to happen with the energy price, with the euros still going up, with the inflation heading down. So I think a 25 basis points rate cut will be more than welcome by the market. But the thing here is that if we have a cut, I think it will be positive for euro and not negative anymore. Just because when we look to the past, there was a completely different economy, and now it's sort of, yeah, we're having a cut, but with the cut, we're having any stimulus to the economy. Okay, sort of, you know, and don't get me wrong, it's sort of a stimulus to the economy, because lower rates will be able to introduce more investments into the economy, and therefore we may be looking to do better deals for the country to grow. So that's my vision going forward. I think, I don't know, you guys can tell me, I'm not the master or anything like that, but I think if we just look a little bit outside of the scope and sort of have a look around, I think, especially in Australia, if you live in Australia, you know what I'm talking about. Population is screaming for rate cuts. Okay, every single one is screaming for rate cuts. And 2 months ago, RBA delivered the first rate cut from last 2 years, okay? Maintaining rates steady up. They haven't changed anything for 2 years. And they're like, okay, now it's time, and then we're going to cut. Like, everyone was cheering so much. Everyone was celebrating so much, because no one can, it can't just, no one can hold it anymore on that stage, you know? So it's really interesting to see how the market is reacting to that, because Australian dollar it went up, so it went positively. So that's the thing I'm looking at. I think the market is having a swift change beneath the surface. No one is looking at it, but you should be paying attention. We're having central banks cutting interest rates, and that's been positive for the economy, because the economy is expected to do better now. It's cheaper money, right? So people will borrow money and maybe open business or something like that. One of my friends, he opened up a business in December last year. It's like a acai bowl. I think you guys know what acai bowl is. Let me just acai bowl like that. You know, those kind of things. It's the best. He's Brazilian as well. For those who don't know, I'm Brazilian. I'm from Brazil, so that's from my country. It's like, it's a fruit. It's really, really good fruit. You know, it's very healthy when you eat like that, but if you put pistachio and peanut butter and everything, it doesn't as healthy as it is. But anyways, so he say like, look, the money now, it's cheaper, so there's no need for me to spend my own money. I can just ask money for the bank and sort of make repayments monthly. And he asked for 120,000, I think, something around those numbers, for business. And he opened up that business, the acai bowl. In 3 months, he paid out. Literally 3 months, he paid out. Okay. So yeah, population is getting there. Population is still spending a lot of money. Okay. It's not cheap. It's like $20 for acai bowl, and he's doing pretty well. So I think Australia, it's not worse as, you know, some other economies. But anyways, pound dollar. Let's go 4 hour. Pound dollar, I've mentioned it about last Wednesday that it would definitely come up these areas here. And yeah, I still believe, you know, it can possibly come back up to this region here. We've seen things like that happening all of the time. But yeah, I think 134 would be the go for the pound dollar. I think if we should enter a trade here, I think it's too late for us to just get in the trade like that. I think if you want to trade pound dollar, I would go for NZUSD shorts. I would go for New Zealand dollar shorts on here. Yeah, I know it's a bit risky, but you know, it's that quick trade. There you go. You know, break up, break down, pull back 50, 60%. Yeah, 61%. Right there. So I think it's really great sort of trade to have on the portfolio as well. Okay, next one. See, do you saw that? Something's just changed. So that's because it just updated again after 15 minutes. So you have to keep coming in, checking, see what's going on. So we were were GBP USD, New Zealand dollar longs. Yeah, I prefer shorts. So I'm going to leave that one aside. Euro dollar longs, we just looked at it. Aussie dollar, US dollar, CAD. This is when it's neutral. It's pretty much close to the 50%. When it's below 35, if I'm not wrong, I think 35, it gets to the side or whatever, long or short. Aussie Japanese yen, US dollar Japanese yen, euro pound. If we long pound, we're pretty much expecting the pound to raise. If we long euro dollar, we're pretty much expecting the euro to raise. So basically here, euro pound is a no-go for the portfolio because we have euros and we have pounds already. So it's basically an exposure that we don't need. Euro CHF is looking to strong sell. Cherry Sand, the AUD is confusing right now because it reacts to both risk sentiment and gold prices. It's a risk on asset, but also benefits from gold, safe haven, and China is a strong economy, especially with China's better than expected export data in March. So I don't really know how to place my thoughts on Aussie. Mate, you got my thoughts. I actually want to ask, what do you guys think about Aussie CAD? What do you think about Aussie CAD, Cherry? Because I had some longs on that and I've closed it out. Let me go 15 minutes. Cool. So I think what we're seeing right now is just a pullback. I think it's just a pullback and we can possibly come to 90 cents. So my my take here is more longs on Aussie CAD. I think we're looking for a retracement, okay? And we had that sort of retracement today. A minute. Sorry. I really like Fibonacci. I think you guys could notice that. I'm looking to more longs, yeah, somewhere around here. Stop losses below this low and take profits at 90 cents. That's my personal trade, okay? That's my personal portfolio. I don't usually show much of that, but yeah, let's say something like that. There you go, 3, 2, 1. I think that's pretty good, in my opinion. I would lovely buy it a little bit cheaper. Okay, lovely buy like somewhere around here. Lovely do that without hesitation, my friend. But yeah, I don't think we're gonna do it. And then target wise, if we think about right here, as usual, if we're looking to continue to go long, I'm just trying to find the, all right, yeah, there you go. If we're looking to go long, then basically short 1, 2, 3, long back up. So basically we have to break this top. Okay, we have to break that top there. And for that, we would need targets. So we can just take Fibonacci. That orange, I'm going to change to blue, and I'm going to put a white Fibonacci expansion. So basically I get from the bottom to the top, and then like this, and there you go. So let me change that to yellow. So that's the 15-minute one. And there you go, we have our targets. So majority of my targets are pretty much here, okay, around 90 cents. So So yeah, I'm looking to continue to go long, not only because of the oil prices, but more of like I guess the Australia RBA. So the RBA had the rate statement yesterday, if I'm not wrong, or 2 days ago, and they say that, you know, oops, sorry, wrong one. And they say that they still pretty like nothing changes, you know, so they still looking to maintain higher rates for longer. Yeah, my TP is at 90 cents, so I'm looking at this big consolidation right here. Oops, sorry, right here. Oh, damn it! How do I do that? There you go. So yeah, I think that's where I'm looking at the moment. Yeah, the entry it's good. It's just, you know, I wouldn't mind to pay it cheaper, get a little bit of drawdown. Let me see where my trades are. My trade is at 88,500. So I have something like that, 88,500, and then stop losses below here and take profits at the 90. Okay, so that's exactly my trade. But again, oops, sorry, that's my trade. It's nothing like you guys have to trade it. It's just what I'm looking to trade at the moment. Cool. Yeah. Anyways, that's what I'm looking at the moment. How much do you manage your trade? How do you manage your trade? It depends. There's ways and ways and ways to manage your trade. It just depends on how you want to trade. If you want to trade swing, if you want to trade day trading, scalp, you know, it just depends. It would depend on your approach, I would say, because if you look to trade like swing trading, I would recommend you to use average true range, so just ATR, to set up stop losses. So you use on the time frame, if you pretty much trading if you're trading swing trading, you would be looking to go for 4 hour, or maybe, you know, a few things around that, and then you could use with the ATR on 4 hours. So you times whatever it's whatever it's saying here on this number. So in this case, it's 478. So 478 times 3.5, and then 1,673. So 167 pips would be your stop loss. So you go like 1,100. How much was that, sir? 1,673. You know, and then your take profit would have to be like at least 2 to 1, in my opinion. But that's one way, and there's other ways as well. If it move 50% to your TP and start turning back, how do you manage it? It depends, man. Let's say, you know, let's say I had this trade open, and then suddenly the market starts to spike up and pull back down. 2 options. You can either leave it open or you can close. But in my opinion, fundamental drive affects market, you know, and it's always will be driving FX market. So you can basically do something like look at the fundamentals, see if it changed it. If it didn't change it, then continue to hold it, right? Continue to hold it and wait for the take profit to get hit. If it changes it, then okay, reevaluate your situation. Otherwise, there's no need to be changing, every time the market goes up 1%, and then you, oh, okay, close 50% and close the trade, or the market reversed like two pips, the market's reversing. Oh my God, no, wait. Why did you get into that trade? Oh, because the Australian dollar will be stronger. Okay. Did the trade already play out, or still playing out? That's simply the two questions. So if you have those two questions answered, then Shabon, that's it. Cherry say, I think that's due to the fact that tariff war is driving the market more than anything, but it's just a temporarily. Can we be always correlated with the oil price? It's the largest exporter of oil. What are you guys saying? Suleiman say, I heard now there is no correlation between Canada. No, there is. There's always going to be. Man, look at that. Canada is right there, is the biggest exporter of oil. Okay, so if we look to this, let me push up the BOP for Canada oil. So that is accounting to million. Okay, it's not what I want. Okay, Canada balance of payments for the current account inventory was, that's not what I want. But anyways, we can see that there's like 10 billion, pretty much 10 billion has come from oil. So what's the GDP? It's 2 trillion, so 1 billion. So it's a huge what? Canada has no way. Oh, okay, that's the Michigan. Yeah, so yeah, there's always correlation. There's always correlation with Canada. Whatever that country has the biggest export, because think about it, right? You have a company and you're selling Apple Pen, whatever is selling, that's not a good example. You're selling card holders, okay? Your biggest customer is buying card holders from you. So what does your revenue look like? Well, if that customer gets out, your revenue may be like 50% less, 60% less, because your biggest client's buying card holders. So if that client doesn't buy anymore, you're on the bush. So that's exactly what happened with Canada. What's the biggest product Canada exports? It's oil. So if Canada can't export oil anymore, then they're lost, right? The economy goes to failure very, very quick. So that's my opinion. There is correlation, a big correlation. If oil prices are expensive, so that at the moment it's not, if we look like that, at the moment it's $60. So if you think about oil prices at $60, we have Canada prices, Canada dollar decreasing. Okay, when we have oil prices at like 100 or something, was $80, $90, Canadian dollar will be more expensive, and therefore Canada dollar will be more stronger. Okay, but at this moment we're not that strong. Okay, if we look here, currency strength, we can see the strength of the currencies being Japanese yen being very strong at the moment, Euro being strong, New Zealand dollar being strong, Swiss franc being strong, Canadian dollar being weak, So if we take New Zealand dollar out, we have Aussie and CAD. Aussie been going up, but Aussie still more stronger than Canadian dollar at the last 1 day. But if we change for last 5 days, that's usually what I look to, we can see that the Australian dollar is much, much stronger, okay? And most likely next week we will have a continuation of that move being stronger, okay? So we can see as well that the AUD CAD, for instance, the Australian dollar AUD CAD, it's much more short, okay? So only 20% is longing. So I continue to expect push up on Aussie CAD. Okay. So yeah, that's my favorite trade for today, in my opinion. I think Aussie CAD up would be a good trade idea to have on the portfolio. Okay. Or we can even do something over here. We can take this one here. Yeah, let me just take this guy off now. Yeah, see, first target was hit, came back down, pulled back. Now probably going to the third target today or tomorrow. So yeah, that's a really good area to be longing in. Right here, support on the 15 minutes. Yeah, it looks good for me. Not a problem, Suleiman. What's your target on Aussie CAD? My Aussie CAD target is 90 cents. 90 cents, but it doesn't mean that it, will go there or something. Just saying that it's the target. As I say, if something changes in the middle of the way, you have to again understand your scenario and change your target. Cool. All right. So my opinion is Aussie CAD long, Euro dollar long would be a good trade as well. So yeah, I think I would maintain myself with those two. I think so, because Japanese yen, I'm not looking to trade Japanese yen at the moment, guys. I think Cherif was saying yesterday, like why Japanese yen is not having that sort of punch, because we usually have a big punch, but it's not happening at the moment. Well, I think we'll be able to come back down to 140. But yeah. Yeah, I guess the Japanese yen is just not safe. It's a safe haven, don't get me wrong, but it's just not safe for investors at the moment. Too much forward guidance in there. Okay, cool. Does anyone have any other questions? What would you trade on the downside if not a Japanese yen pair? Yeah, I'm not gonna lie to you, Cherif. I had that chat with the guys for the commitments of trader. I mean, they can just like with automation at the moment, they can just get the scrapping from the COT directly from the CFTC, but I'm not too sure how that's standing at the moment. I can ask them back and see if they're going again or not. But yeah, there's ways and ways of automations. I think I'm gonna tell them again and see what they think. And we can definitely put something out here, because this was my idea. I've talked to one of them and they were like, oh, okay, that sounds cool. But yeah, I think there's, lots of things that can be added. It can be added a COT, it can be added the history of the DXM. you know, the Forex market sentiment, sorry, and all this stuff. So I'm gonna have a chat with them tomorrow because it's the last day, and we can do something out, definitely. Do you think the rate cut would not drag the euro dollar to correct down? No, I think we can actually have a continuation up on euro dollar. Last thing, the US is still China's biggest trade partner. The US is still China's biggest trade partner, and since China depends so much on export, we'll have to wait and see if the political rows aren't more stimulus to boost domestic demand and soften the trade hit. Honestly, it's too early, I think, to tell. Honestly, it's too early to tell if China can ride out this tariff war. And let's be real, when China is affected, so are Australia, New Zealand, Japan, that's correct. Same goes for the US and Canada. With all this uncertainty, the safe havens remain the best option in my perspective to trade upcoming weeks, especially September. Yeah, gold is my favorite, man. I guess we would be looking to gold. Yeah, definitely gold. What a nice trade here. All-time highs again every single day. Yeah, interesting, eh? So I do believe on a trade up, on a trade long on gold. Cool. All right, guys. Have a great day. I'll be back tomorrow with more, you know, fundamental sort of aspects, and we can have a chat on that. Thank you so much for coming today, and I hope you guys have an awesome day or awesome night, whatever. And yeah, take care, everyone. Talk to you tomorrow. Cheers. Bye-bye.